Hi and welcome to our special webcast following the transposition of the 6th version of the Directive on Administrative Cooperation, known as DAC6, into domestic legislation on 18 March 2021. I am Marios Fokides, Director in Deloitte's Business Tax Services Department.
And I'm Angelos Gregoriou, Senior Manager in the same department.
And together we will provide an overview of the key provisions of the Cypriot DAC6 legislation. DAC6 is an EU directive that aims to strengthen tax transparency on aggressive cross-border arrangements by introducing mandatory disclosure obligations for EU intermediaries and taxpayers. Even though the Cyprus legislation was only voted recently, DAC6 has a retroactive application as it is in force since 25 June 2018. The Cyprus tax authorities recognize the complexity of this new legislation and intend to issue further guidance to provide clarifications. The directive affects any person who may act as an intermediary to a reportable cross-border arrangement, RCBA, being involved with its designing, marketing, organizing, making available for implementation, or managing its implementation. While the primary reporting obligation lies with the intermediaries, the obligation also falls on the taxpayers in 3 cases: when there is no intermediary involved, when the intermediary involved is outside the EU, or when the intermediary is covered by the legal professional privilege. An arrangement constitutes an RCBA if it has a cross-border dimension and has the characteristic of being tax aggressive. An arrangement is a cross-border one if it concerns at least one EU member state and is defined as tax aggressive if it contains at least one of the designated criteria called hallmarks. There are 5 categories of hallmarks which cover a broad range of arrangements. Angelos will give us a brief overview of the hallmarks included within the DAC6 legislation.
Thank you, Marios. Let's now go through the 5 categories of hallmarks that determine reportability. Category A hallmarks cover confidentiality clause and contingent fee arrangements linked with tax advantage, as well as the use of standardized documentation or structures. Category B hallmarks capture the acquisition of loss-making companies for the use of their losses, arrangements that have the effect of converting income into capital, gifts, or low tax categories of revenue, and arrangements facilitating the round-tripping of funds through interposed entities or transactions that cancel each other. Part of Category C hallmarks capture deductible cross-border payments made to associated enterprises that enjoy 0 or almost 0 rate of tax, a full exemption from tax, or the use of a preferential tax regime. Meeting Category A, B, and the aforementioned Category C hallmarks would only trigger a reporting obligation if the main benefit test is satisfied, meaning that the main or one of the main benefits of entering into that arrangement was the obtaining of a tax advantage. The remaining hallmarks under Category C capture deductible cross-border payments made to tax nomads and non-cooperative jurisdictions, depreciation or relief from double taxation claimed in more than one jurisdiction, as well as the transfer of assets with step-up in value. Category D hallmarks cover arrangements that have the effect of undermining a reporting obligation on automatic exchange of financial account information and the use of non-transparent beneficial ownership structures. Lastly, but importantly, Category E hallmarks capture arrangements where unilateral safe harbor rules are used, transfers of hard-to-value intangibles, and transfer of functions, risks, or assets that result in a significant decline of the transferor's EBIT. The remaining part of Category C, along with Category D and E hallmarks, are automatic, meaning that if you meet one of these hallmarks, a reporting obligation is created without the need to assess the NBT. Back to you, Marios.
Thank you, Angelos. Information concerning RCBAs has to be filed with the Cyprus tax authorities through the electronic governmental portal Ariadne by uploading an XML file. The information received by the Cyprus tax authorities will then be exchanged with the EU tax authorities affected by the submitted RCBAs. Cyprus has adopted the deadline set by the Directive, applying for arrangements held since 25 June 2018. Due to COVID-19 pandemic, these were initially extended by 6 months. Because these deadlines have expired before the implementation of the local legislation, Cyprus tax authorities announced that there will be no imposition of administrative fines for overdue submission of information until 30 June 2021. For arrangements held as from 1 June 2021 onwards, a 30-day rolling window will apply for their reporting. Failure to meet these requirements may result not only to reputational damages, but also to financial penalties. As shown in the table, the penalties can reach a maximum of €20,000 per arrangement. There are a number of strategies that would promise to an organization absolute compliance with the new DAC6 requirements, which include perform impact assessments and identify transactions and services potentially affected by the hallmarks, develop internal policies and procedures to guide personnel for scanning through arrangements and identify the ones that should be reported, raise awareness within the business through bespoke training programs, track regulatory changes, and select the right technology to track and report these arrangements. At Deloitte, we have a dedicated network tracking the implementation of DAC6 to help you navigate fast-paced regulatory developments, keep you up to date, advise on your responsibilities, and assist with the technology solutions. Deloitte has internally developed a tool that can assist intermediaries and taxpayers to track transactions throughout the compliance process. The time to start acting is now. This concludes our special webcast on DAC6. For more details, please refer to our tax alert. Thank you for watching.